Well, hello, and thanks so much for joining this afternoon on behalf of Union Bank and Trust. I'm excited to kick things off with our UBT Learning Lab webinar series in partnership with BBB Midwest Plains. Thanks so much to Jenny and the BBB team for having me. My name is Brittany Planos, and I manage the financial literacy program for Union Bank and Trust. If you're unfamiliar with Union Bank and Trust, or UBT as we're often known, we're a family-owned Nebraska bank with headquarters in Lincoln, Nebraska. This is where I'm joining you from today. Our service area overlaps much of that served by the BBB Midwest Plains. And I think what sets UBT apart from many other banks of our size is that while not only do we have commercial business banking, we also have an entire small business banking division uniquely developed to support small business owners. We understand that your business is really unlike any other, and each business has its own unique needs, its challenges, and of course, opportunities. So 3 times a year, UBT gives a different qualifying small business the keys to our pop-up shop at Union Bank Place in downtown Lincoln for a 4-month retail stint. So we're proud to share that we're on our 8th small business. So if you are local here to Lincoln, know that this is a potential opportunity for you if you're looking to decide if you want to grow and scale your business. This is a photo of Bia Espinoza. She's the owner of Sousa's Sweets and Balloons. She was our very first pop-up owner business. So this is what I'll be covering in our time together this afternoon. We'll go over the key differences and similarities between business and personal credit, how to establish and build strong business and personal credit profiles, how to access and read your profiles and business credit reports, and what tools and resources and continued support are available to you as a small business owner. So why does business credit matter? Well, business credit matters for many reasons. It establishes a financial identity separate from your personal credit. It allows your business to access and secure financing and hopefully obtain lower interest rates. So whether your business is growing or you're well established, every business will likely need to borrow money at some point or another. Your business credit score is a measure of your business's financial health. It helps lenders, banks, other suppliers assess how likely your business is to pay its bills on time. So similar to taxation, credit often depends on your business structure. So we often think about business structures in the context of taxation, but how your business is structured will also impact your credit situation too. So as a fun fact, by the numbers, 95% of US businesses are small businesses, and more than half of US businesses have a sole owner. So you don't need to do business as an LLC necessarily to start building business credit, but there are intentional steps to separate your business identity. So going into business as a sole proprietor is easy. You just simply start business, right? You are the business. Almost 10% of small business owners use their personal credit to fund business endeavors, at least initially. So businesses will often start as proprietorships, and maybe you've been in that situation, and then may change to an LLC or other structure as the business grows. So does personal credit affect business credit? Yes, in short, yes, it does. It often does, and especially for startups or newer businesses. Lenders use a business owner's personal credit history to evaluate their credit worthiness, especially if the business is new or just doesn't have an established credit history yet. So we're just going to compare this side by side here with business versus personal. So with liability with business, it's limited to your business. Or with personal credit, it's tied to you as an individual. So that's one of the main reasons why I think a lot of business owners are looking to establish their own their own business credit so it can be separate from their own. The scoring with business is on a scale of 0 to 100, but for personal credit scores, it goes on a scale of 300 to 850. Major credit bureaus are Experian, Equifax for both, and then Dun & Bradstreet for business credit, and then TransUnion for personal credit. Generally, with businesses can access higher credit limits than individuals can. And then separation, typically your business credit is going to be tied to an EIN, an employer identification number or business tax ID number, whereas your personal credit is going to be tied to your social security number. It's interesting to note though too, is that there's a lot of protections for personal credit. but it's not extended in the same ways that it is for businesses. So there's actually generally fewer legal protections for business credit. I know that's kind of interesting, right? So there are several benefits to separating your business credit from your personal history, including liability protection and easier tax filing. Clean financial separation makes bookkeeping easier and audits hopefully a little less stressful. The IRS also scrutinizes business income and deductions. So blurred financial lines could potentially trigger an audit, and of course, nobody wants that. So this is another good reason in support of separation. So establishing an AIN, opening a business bank account, registering with your state, these are some key early moves to establish your business profile. And while you don't have to do these steps necessarily in this order, getting a DUNS number is really important. That's something that I'm going to touch on here in a second. Um, I would say that applying for and using your business credit in your company's name is a key step as well. So not all credit card companies and vendors report business credit. So that's something to note too. So it's helpful maybe to ask before applying. So if your sole goal is to open up a credit card to have it start reporting in your business's name, you want to make sure that that credit card does actually report to the business credit bureaus in the first place. So each financial institution is going to be unique. They might have their own requirements, but once you have your EIN and business formation documents, you can generally open a dedicated business account. That's usually what they'll ask for. So at UBT, we offer quite a few options to fit your business, and I suspect many financial institutions do as well. These include, free accounts with no minimum balance requirements for businesses, especially if you're a business with low transaction volumes. That might be a good option for you. So your Dun and Bradstreet number versus EIN. So why you might want a DUNS number is that it establishes your business in the Dun and Bradstreet database and allows other companies, including government agencies and financial institutions, to confirm that your company is indeed an active business. So it automatically creates a unique and separate identity for your business. Other businesses can use that identity then to evaluate your information and explore partnerships, maybe approve credit, make contracting decisions, and more. So many of the world's largest companies are going to ask for a DUNS number on applications to become a supplier or to obtain credit. Many government agencies, they require this from their contractors. So as of April 2022, SAM.gov phased out the DUNS number. They replaced it with a unique entity identifier, a UEI. So sometimes you might see that interchange. If you already had the DUNS number, it'll transition you automatically to the UEI. But essentially, your EIN, it identifies a business for tax purposes. So it's issued by the IRS. Whereas your DUNS number or UEI, it identifies a business for credit and business transactions. And that's issued by Dun and Bradstreet. So any business can apply for a DUNS number. For the IRS, an EIN is required for any business with employees. That is a must. DUNS numbers are used globally, where the EIN number is just local here to the United States. And then your DUNS number doesn't really change throughout the life of the business, where the EIN number can when the business changes structures. So personal credit, we've talked a little bit about personal credit now, or business credit. I want to move on to personal credit. If you're a small business owner starting to build your business credit, it's helpful to first start working on your personal credit history. So this is where we're going to start before we dig in further onto business credit. So credit reports and credit scores, I like to think about it, to analogize it almost like a credit report to a high school transcript and a credit score to a high school GPA. Just like how a high school transcript records your cumulative academic history, your credit report is a summary of your financial history. A history of high academic grades, like A's and B's, you're going to see a result of a higher grade point average. A history of paying financial obligations on time and in full is also often going to result in a higher credit score. So it's important to know that just like how a GPA can change from semester to semester, a credit score can also change from month to month based on what you're doing. It's not stagnant, it is dynamic, and it will adjust either positively going up or negatively going down based on your financial actions and behaviors. So you can check your free personal credit report a couple of different ways. What I would recommend is through annualcreditreport.com. This is the official website. Your credit report, it's not going to show your credit score, but your credit score is derived from that credit report. So technically, every person has three credit reports: an Equifax report, an Experian report, and a TransUnion report. So these are the official bureaus that hold all of our consumer credit information. They're not government agencies, but they have the authority to hold consumer information. So how to read your credit report. It's divided into four sections. So you want to look at your personal information just to make sure everything looks clean, your name, your address, your phone number, everything is spelled correctly, that it includes addresses that you've previously have lived at versus your current address, that everything just looks good. Public records will also be on there if they apply to you. And I'm not talking about criminal records. What I'm talking about are things like liens, past bankruptcies, maybe judgments, foreclosures, those types of things will be on there. It will also include revolving and installment accounts where you're an owner, a co-owner, or an authorized user. So not bank account information, but like credit cards will be on there and any loans. You'll also see at the bottom that there will be inquiries on there. Every time you apply for credit, it's considered a hard check. So if you're typing in your social security number, that is a hard check, and that's considered an inquiry. And that stays on your credit report for 2 years before it falls off naturally. So all of those credit checks will be on there over the last 2 years. So your ability to manage your credit, it's expressed as a credit score. I like to think of it sort of this way. It's not a measure of how well you manage your money, but it's a reflection of how well you use other people's money, borrowed money. Your score is going to vary from bureau to bureau because they each have their own version of your personal information. So you might see some slight differences there in your credit score. So I often get asked, hey, my credit score shows that it's this when I log into my online banking, but I recently applied for a loan and they said it was this. It could just be because of the different models that they're pulling. But generally, credit scores go on a scale of 300 to 850, and the higher your score, the better. A higher score is going to indicate that you are more likely to pay your debts on time and pay them in full. It's essentially a risk score. So, the higher your score, chances are a bank or a lender is more likely to say yes to you, and you're going to be rewarded with a lower interest rate, the cost of borrowing over the course of that loan. You can check your credit score for free a variety of ways. Credit Karma is one, Experian is one. There's many websites where you can check your credit score for free. These are just a few. So the factors that go into your credit score, I often get asked, well, how can I improve my credit score? And usually my response is, well, it depends. It depends what's bringing it down. But your credit score is comprised of five factors. Luckily for you, 65% of your score is usually within your control. It's, do you pay your bills on time and do you pay the full amount? Or are you carrying a balance from month to month? So that's the best thing that you can do. Those two factors, pay your bill on time and in full. That's generally going to see the biggest jumps in your credit score from month to month. So with that payment history, when you log into your credit report, you'll see like a green check or like an OK for every month that you've paid that particular account on time. Amounts owed is going to be relative to your credit limit or your loan amount. So to make math easy here, let's just say you had a credit card with $1,000 limit. Really, you want to keep that usage. They say 30% or less. I would tell you 10% or less each month. So for example, if you have that $1,000 credit card limit, really you should be putting no more than about $100 on that card each month and then paying that off in full. So that way you're not using all of the credit available to you. So I often get asked by people, well, I'm using the full amount, my full credit limit, but I pay it off each month, but my credit score, it really just doesn't go anywhere, or I've seen it go down. I said, well, because you're using 100% of your available credit, which is actually a risk factor. I know it doesn't make much sense, even if you're paying your bill in full, but if you can keep that utilization low, that's going to help you out. So that would be my recommendation: is keep that usage low, 10% or less available relative to your limit. Credit mix, if you have a mix of several different credit cards or loans and credit cards at the same time, and you're managing those well and paying them on time and in full, that actually helps your credit score rather than maybe just having a single credit card. It shows that you can manage payments across a couple of different types of credit. Credit history is how long you've had credit open to you. So my advice would be as soon as you open a credit card, try to keep that account open for as long as you can without closing it. Many of us have credit cards that we maybe don't use as often. I would suggest keep them open. Maybe put something like a subscription, maybe like gas, groceries, maybe Netflix or something on that card just to keep it open and active so it won't close, automatically for you not having it, any usage on it. Sometimes the bank will do that. But try to keep those lines of credit open. The more years of lines of credit that you've had, the better. That will help your credit score too. And then new credit, those inquiries I was talking about earlier. Every time you apply for credit, that is a hard check and that will stay on your credit report for 2 years. So you really want that number to be as close to zero as possible. So really only apply for credit when you need to. Really, you should have no more than about five inquiries on your credit report every 2 years. That also includes store and retail cards too. So when you're at the register and they're saying, hey, do you want to sign up for this rewards program, save 15% off your purchase today? If you type in your social security card number and apply for that card, you're going to see that that will be a hard check on your credit report. It'll stay on there for 2 years. So be careful of those. Sometimes that can ding your credit score 5 to sometimes 30 points every time that you apply for a credit card. So sometimes saving that $5 in the moment is not worth the hit to your credit score. So what happens if you don't have a credit history at all? Here in the United States, we all kind of start out credit invisible, where we have no credit history at all. And we have to prove ourselves by making purchases, paying them off, making purchases, paying them off over time to build our credit score. So if you have no credit at all, it's almost the same as having bad credit. There's just nothing to compare your history to. So it's assuming that you're risky. So generally, those that don't have any credit at all will need to have a cosigner, or they may be approved for loans, but they're usually going to be approved at a much higher interest rate than those who do have an established credit history. So let's dig into business credit a little more. So according to Dun& Bradstreet, so unlike consumer credit, there's no single credit score or ranking in business credit. I know it makes it more confusing, right? Business credit scores, they consist of multiple types of scores that range from predictive or what might happen in the future to performance-based, which is historical, to showcase the company's reliability and future stability. The three major business credit bureaus are Experian, Equifax, and Dun & Bradstreet. So know that Experian and Equifax are still the same like they are for personal credit as a bureau, except that TransUnion does not report any business credit. Instead, Dun & Bradstreet, I guess, takes the place of TransUnion. So the three major business credit bureaus collect data from lenders, suppliers, public records to create your credit profile. You're going to notice that Experian and Equifax are also the bureaus for personal credit. So unlike personal credit, which is highly regulated under federal law, business credit reports are not regulated under the Fair Credit Reporting Act. So this means business owners aren't entitled to free business credit reports or scores like you are with personal credit. Disputes aren't regulated as they are with consumer credit, and there's no limit on how long negative information can be reported, or with consumer credit reports there is. So that's some of the downside with business credit. So how do business credit scores work? Well, according to Experian, an Experian business credit report typically contains identifying information, payment history, public records of judgments, liens, bankruptcies, inquiries, company background, and your business credit score. So as with personal credit scores, the precise formulas used to calculate your business score are usually proprietary. You can't find much information openly about that online, but the factors that contribute to the calculation, those are known. And that's generally going to be these here. So number of trade experiences, outstanding balances, payment habits, credit utilization, trends over time, and so on. So where most modern general use personal credit scores range from 300 to 850, business scores ranges, they can vary. I would say typically it's 1 to 100. Experian business credit ranges fall within that range there, 1 to 100. But a higher score, just like with personal credit, represents a lower risk of delinquency. And then they also have a financial stability risk rating, and that's on a scale of 1 to 5. So you can try out Experience Score Planner tool. This is where you can play around with it to see how it's going to impact your business score. And I put that link to their site in here as well. So Equifax Business, on the other hand, their credit report is based on company profile, credit summary, public records, and payment trends. So a little bit different. They include more factors within their model. A failure risk score, this assesses a business's risk for closing within the next 12 months, and that goes on a scale of 1,000 to 1610. So I think that's kind of interesting too. That goes into that predictive model that I talked about earlier. And then Dun and Bradstreet. So of the three, Dun and Bradstreet is the only credit bureau that focuses exclusively on business credit. So no personal credit at all. They report primarily on how a business interacts with vendors and other suppliers, which is why potential suppliers often look up your Dun and Bradstreet report before they offer your business trade credit. So in addition to business data submitted by suppliers, Dun& Bradstreet also looks at public records, industry data, other historical data in your D&B profile to complete their credit scores, one of which is a Paydex score, which is the best known. So this Paydex score goes on a scale of 1 to 100. 80 or higher, that's generally considered low risk, 50 to 79 moderate, and then 49 or lower is high risk. And then they also include a failure score, just like Equifax does, and also a delinquency score too. So some small business resources. Here's a few websites that I've included just for additional support. Here's the information for UBT Small Business Banking. But again, here's that annual creditreport.com website, how you can apply for an IRS employer identification number. If you are currently a sole proprietor and you're using your social security number, you want to apply for that EIN number, you can do that through the IRS. Here's where you can apply for that DUNS number. Equifax Business's website, Experian Business's website, SCORE. They help with business plan help along with many other things. SCORE is a great resource. And then also the U.S. Small Business Administration's website here too is included. I hope that you found today's information helpful. I would encourage you to join us for our upcoming UBT BBB Lab Learning Lab webinars for the year. We've got some great speakers on deck with some helpful tools and information for small business owners. Next week, we have our own Ryan Schad with our Fort Collins office talking about expanding into a new market. So hopefully you'll be able to join that one. You can register on the BBB Midwest Plains events page. Well, thank you again for your time today. I have appreciated the opportunity to speak with you. If I can be of assistance, please don't hesitate to reach out. I'm here and happy to help. Have a good rest of your day. Thank you so much. Take care. Have a good one.